Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates, and then we are going to do a deep dive into 1099 loans. What we'll do here is just wait a couple of minutes to get started to give everybody a chance to hop on here. And in the meantime, we put the chat up on the screen. So feel free to drop a comment there as you tune in, and we'll wait just a minute here just so we can go live on all the different platforms. But feel free to drop a comment there as you tune in. Appreciate those comments coming in. Great topic here for today. Excited to get into it. We'll get started in just a moment. All right, some comments rolling in. Appreciate it. And it looks like we are live on all the different platforms, so we can go ahead and get started. As you tune in, keep dropping comments there. And feel free to drop any questions you have as we go through the presentation today. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. What we do on this show every morning is go through some live mortgage rates and then do a deep dive into a different loan topic. Now, today's loan topic is something we're very familiar with here at the Mortgage Calculator because we specialize in non-QM loans, which is 1099 loans. So our sales manager, Jose, with 28 years of experience, is going to do a deep dive into 1099 loans. But before we do that, we'll go through the different programs and pull up some live rates for today. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are looking like this morning.
All right. Finally, we've had some relief here on the rates, so it should be a good time to check it out. Let me change my screen. And pull up our pricing tool here. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR for today, October 11th, just after 11 a.m. All of the basic programs are live with rates for today. If you'd like a full breakdown, a full loan estimate with all of the itemized fees that go into the APR, please get with our team members. We have over 400 licensed loan officers in 24 states. So for our demos here, we will set up a scenario that allows us to compare across the programs. So we'll set up the same scenario for all the different demos. We'll set up a $400,000 loan amount to start. We'll set a LTV to 80% loan, 20% down payment. We're going to set the price to show us the lowest rate option, since the rates are a little bit crazy. We'll check out conforming, and then we'll go into FHA, which is usually the next option that most borrowers look at. And then we'll go into our non-QM, also known as expanded guidelines, where we have over 5,000 additional options beyond the standard here. We also have VA and USDA. Remember, VA is only for eligible vets and active service members. If you are eligible, let us know. We can quote it in a couple clicks. And if you're looking in a USDA area, remember USDA only works for eligible areas. If you happen to be shopping in one of those areas, let us know. We can quote it, no problem. But we'll start today with conforming conventional. We'll do a purchase, 30-year fixed for all the demos. Primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt-to-income ratio of 40. So with these settings, let's see what the lowest rate option is this morning. All right. Definitely seeing some downward momentum and no longer have to use those crazy specialty programs to get here into this rate. So 7.125 rate, 2.375 discount points, puts the final APR 7.338 here. So we definitely love when we see some downward momentum. Now, if there's any reason our customer doesn't qualify for conventional, usually the next option we want to look at is FHA. So we'll go back to our pricer, set up the same exact numbers, And we're going to compare an FHA program. FHA does allow a little more leniency on credit issues, as well as a much higher debt to income ratio we can utilize. For the demo, however, we keep everything exactly the same so we can compare apples to apples across the programs. So let's check out our lowest rate options for FHA. Oops, did I put that in wrong? Hold on. Let me redo that one more time. Keep typing in. Want to be able to compare them exactly. There we go. 6.375 rate puts the discount points at 2.466. Final APR 7.017. So that would be the comparable rate option for FHA. You can see in this example, if our customer qualifies for both, FHA is actually a touch cheaper, as it has been for the past few months for sure in this example. So definitely recommend our customers that qualify for both. Don't overlook FHA, could be cheaper. And our customers that must use FHA, definitely a good option here. Now, where we love to specialize is if our customer does not qualify for FHA or conventional. Many other banks or lenders will have to deny that borrower, but that's where we have over 5,000 alternative options under expanded guidelines, also known as non-QM. So when we select this option, everything else will stay exactly the same. However, we have a new option that pops up for income verification. So full docs, what we use for conventional and FHA. So we'll typically choose a non-QM option in order to take advantage of one of these others, such as asset related, business bank statement. The investment options are only for investment properties. We'll talk about that shortly. Personal bank statement, 12-month is what we use for the demo. That's our most popular program for a primary home. We also have RSU, stated, VOE, 1099. A couple options here that Jose is going to go in detail here in a minute. And P&L and no income, CDFI, all kinds of different options here. For the demo, the most common is the 12-month personal bank statement. That's for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit 2 years of tax returns, may have write-offs or may have different things going on where they don't qualify or may not quite get as much income as they really want for the house they really want. So we'll solve that problem by using no tax returns at all, just their last 12 bank statements, to determine a debt to income ratio of 40% in this example, using just their cash in the bank, no tax returns at all. So using this method, most of our self-employed borrowers will qualify for double or triple the income and can therefore get that property they really want. So let's check out the bank statement options this morning. And since conventional finally has seen some downward momentum, we are no longer beating it with the bank statement option, but we're still right there. So the portfolio, the specialty option here, 7.25 rate, 2.5 discount points and cost, puts the final APR at 7.367, which is right there with conventional. I think it's a touch higher. And then we have other more standard options here at a little bit higher APRs, which is still right there with conventional. So definitely recommend. Any of our borrowers maybe need a little bit of extra help. Non-QM, almost identical cost here at the best option. And even these other options are nearly identical to conventional pricing today. And in the past, when the rates are going crazy, the non-QM has actually beaten it a few days. Now, if we scroll down here, there's a ton of different options. Some of these may allow issues such as bankruptcies, foreclosures, things like that. So some of these at a little bit higher rates and costs may allow us to get around other issues as well, not only using alternative income, but other issues as well. So please get with our team. They will find the best one for you there. And before we get into Jose's 1099 example, we always want to do some live pricing for investments. So hopefully we've seen, since conventional has relaxed a little bit here, hopefully we see some movement on conventional investments. We'll set up the same scenario, 80 LTV. We can buy down a little bit lower on investment here. We'll compare our conforming to our expanded guidelines, also known as non-QM. Remember, government programs, FHA, VA, and USDA do not work for investments. So first we'll check out our conforming investment example. Everything else is going to stay the same except for the occupancy here. So let's see what conventional has for us this morning. All right, so still with the adjustments of conventional for investment properties, we have our specialty program. This is a portfolio. It's not actually a conventional program, but it uses the same guidelines. So best option, 7.125 rate, 3.5 discount points and cost, puts our APR 7.375. So great option for our borrowers that want to take advantage of our specialty programs there, especially when the agency product, so this is the first agency product, has added loan level price adjustments for investment properties that push the rate up higher. So this is almost the same program. However, this has the conventional adjustments. So 7.75 rate, 3.375 discount points, pushes the final APR to 7.996. We love to see it under 8 for conventional. It was over 8 for the last week or two here. So definitely some downward momentum. But these specialty programs are really beating it. Definitely recommend all of our MLOs, recommend these specialty programs that are the portfolio programs, especially for second homes and investment properties where we can eliminate these gigantic loan level price adjustments that are pushing these products up. Now, for the final demo, we always want to do our non-QM investment property. So we'll set up the same scenario here. We'll choose expanded guidelines, also known as non-QM. And now we have to set a couple new options. First off, income verification. The most popular option for an investment property is going to be our DSCR option because it doesn't require any income or employment info from our borrower. Simply use the estimated rental income from the property to determine a DSCR ratio. It stands for debt service coverage ratio. If the estimated rents from the property can cover the PITIA of the mortgage, aka the property cash flows monthly, that's a ratio of 1.0 or higher. We even have options for ratios under 1 where the property doesn't cash flow. For the demo, we always put 1.5 as the highest value the computer accepts so we can see all the options. And we must select a prepayment penalty. This is standard for non-QM investment properties. 3 years is always standard. That's what we will use. We can select 0, that will cost more and limit the amount of loan options that show up. We could also select 5 years if we wish, which will again limit the amount of loan programs, but does save our borrowers some money if they're willing to do the 5-year option. 3 years is the most common, so that's what we always use for our demo. So let's check out the DSCR options today. All right, this one is smoking here, 7.5 rate. 3.225 discount points and cost puts the final APR at 7.641. So almost into the portfolio option and definitely beating conventional today with this DSCR option. And then we have a ton of other DSCR options right there with conventional as well. So with the conventional investment properties, definitely recommend our investors check out the non-QM or DSCR options. I'd say 90+% of investors when comparing the two, especially like today when we can actually beat conventional with a DSCR loan, we'll use DSCR. Even if we don't quite beat conventional, DSCR still has a lot of advantages. No income, no employment. Our investors can do 1, 2, 5, 10 loans at a time to refinance multiple properties, buy multiple properties, etc. And if you scroll down here, you see we have a ton of different options. Some of these are a little bit higher rates and costs, may allow bankruptcies, foreclosures, other credit events, may allow short-term rental income calculations, and other guideline kind of workarounds here. So a ton of different options. Please get with our team. They will find the best ones. Now let me go ahead and switch my screen and we will get into today's topic. So as we do every day, we will go over a specific topic. 1099 loans is an option you see on the pricing tool. They are a little bit tricky, so we're going to have Jose go over these specific examples using the 1099 income option. Obviously, this is going to be for our self-employed borrowers that receive a 1099. So that's kind of the first step here. This is kind of a alternative, I guess I would say, to our bank statement, P&L, and of course our full doc non-QM options. So this is still considered kind of under that umbrella, a little bit more niche program, though, a little bit more restrictions, but for the right borrowers, this is the right program. So, Jose, can you just explain a little bit more about what they can use and can't use? And then also just give them an example of the borrowers that we should use this for, because there are very specific borrowers this is absolutely perfect for.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Yes, the 1099 option is for self-employed borrowers only, but as Nick was saying, there is a little bit of a twist because most of the time when you are a 1099, when you receive a 1099, you usually, not all the time, but usually receive them from one company, right? I'm not going to say one employer because technically you're not an employee of that company, you're an independent contractor. But what happens many times when an employee, when a independent contractor is on a 1099 is simply because the company decided that that's the way they were going to pay them for whatever reason, maybe saving on payroll taxes, let have them handle it their own way. But that's just the way that they do it. So, 1099 is a great option as compared to bank statements because the 1099 option will allow you to go much more easily to a higher, or should I say, to a lower expense ratio or lower expense factor, whichever you want to call it. On the 1099 option, we can use up to 90% of the income that is reported, of the gross income reported on the 1099. Now, who are some of the perfect examples that can go 1099? For example, somebody that was previously working a job as an employee, for example, a licensed electrician. They're licensed electrician, and then now they transitioned over to from W-2 to 1099, and they've been 1099 for the past 12 months. And prior to that, as a licensed electrician, and prior to that, they were W-2 as a licensed electrician. That individual would most likely be able to qualify for the 1099 option without being 24 months self-employed because they were doing the same trade previously under a W-2 with their license that they're doing now with a 1099. So any licensed individual like that in that scenario could do a 1099 even though they're not 2 years, fully 2 years self-employed. Another perfect example for a 1099 option is a real estate agent. That's one of our favorite examples. Rather than use the bank statement option, which may limit you on the profit or expense ratio, whichever you want to call it, on the deal, the 1099 will allow you up to 90% of the income for that real estate agent. So much cleaner option than having to go bank statement for your self-employed borrower uh, if your borrower receives a 1099. So be on the lookout for 1099 options. Main benefit is a higher profit margin that you can use. So in our examples here, I have a few primary and a few investment purchase and cash out refi option. This is our maximum LTV. Maximum LTV is 90% for our primary 1 unit. And you can see here the par rate, which is our lowest cost option, is at 10.125% rate, and you can buy that down to 9.375. That was for a 1 unit. 2 unit option, 2 to 4 unit option, and I actually ran this as a 4 unit. I'll be happy to inform our house hackers out there that the 2 to 4 unit option has the same cost on the rate, same LTV, no adjustments for a primary as the 1 unit. So 1 to 4 unit, same rate, same cost, same LTV. Investment is maximum 85% LTV for the purchase, so it's 15% down. And here you do have a little bit higher rate here because it is investment. So you're looking at 11.499 as your lowest cost option. And we do have a pretty deep rate sheet here. We can buy that down all the way to 9.374 for your 1 unit investment purchase at an 85% LTV. And then again, I'll be happy to say that the 2 to 4 unit, same cost, same rate, 11.499, lowest cost option. You can buy that down to 9.374. Now for some cash out options. On a primary 1 unit cash out, the maximum LTV is 85%. And I will remind everybody that non QM loans are never subject to any mortgage insurance. So this option here, 85% LTV, 10% is your par rate. You can buy that down to 9.125. That's for your 1 unit cash out. And now your 2 to 4 unit cash out, again, same rate, no loan level price adjustment for the property being 2 to 4 unit, 10%. Lowest cost option, 9.125, lowest rate option. And our last example here is our cash out refi of investment. 1 unit here, and I only have the 1 unit quote because the 1 unit and the 2 to 4, same rate, same cost. So you're looking at 10.874% is your lowest cost option at an 80% LTV and your cash out refi, and a nice deep rate sheet here. We can buy that down all the way to 8.499. That's a great rate, 8.499, 80% LTV for a 1 to 4 unit investment property cash out using 1099.
All right. I don't see any questions here in the chat. Once again, a great tool to use to make sure that you can help all of your borrowers, even if they have different alternative income, using our non-QM program. So appreciate everybody tuning in. Remember, we do this 11 a.m. Eastern every weekday with a new deep dive topic, and we check the live rates. So we'll be back here tomorrow with a new deep dive topic to go into. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we will see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody. Have a great day.